Mic check, okay. Well, thank you everyone for attending this keynote, and thank you to the Crypto Valley Association for having me today. I was asked to present something about Ethereum. Well, so why can you talk about Ethereum, right? It's been 2 amazing years of market recovery since the previous bear market. So I expect our industry to continue to grow a lot and also to welcome many new talents. So this talk is about, well, remembering where we came from and seeing where we'll be going further. Quick piece about myself. My name is Jerome. I run a startup company called Cometh.io. We do gaming and couple of tooling for DeFi. You can join our newsletter and obtain some NFTs if you'd like. You can email me there. I'm also a professor in economics at CNAM, an engineering school. And I'm the lucky president of Ethereum France, an association promoting Ethereum in French-speaking countries. I know many of our goers at the HCC conference are from Switzerland. So if you heard about this conference, do think about coming there. It's a cool conference, not as cool as having one in Zug, the crypto mecca, but still. And it will happen again in Paris in July 2022. So a little bit of Prologue. Do you remember those days, October 2008? Probably not. Not many people were around at this time or were interested in Bitcoin, but still, this is the founding moment for our industry, having an anonymous person or an anonymous group called Satoshi Nakamoto saying, hey, I just published this, what do you think about that? It turns out on this cryptography mailing list with many academics, this caught the interest of many researchers, of many developers, of many implementers that wanted to see this happen. And the following months, January 2009, we had the first version of Bitcoin implemented and the famous Genesis block being created, where you see the text written in the block, making an appeal to a previously published headlines of the Times, Chancellor on the brink of second bailout for banks. Flash forwards 1 year after this, May 2022. If you like pizza and you like Bitcoin, you should remember this date, because this is apparently the first recorded transaction for a real good in the real economy paid with Bitcoin. Bitcoin Talk forum, people were chatting about, hey, I want to buy something with my Bitcoin. Would anyone send me some pizza against Bitcoin? And they settled the transaction. OTC, well, you would go OTC for 10,000 Bitcoin. They did OTC on a forum, and someone paid 10,000 Bitcoin for 2 Papa Joe's pizza. Flash forward a couple of months after, the Japanese trading card company, MTG Gox, started to authorize Bitcoin payment and Bitcoin trading. And of course, the opening of Silk Road almost 6 months after. This is where the tricky reputation of crypto may have started, where we saw the rise of having access to illegal product through dark web paid with Bitcoin. Even if 2 years after this was closed, this stain on the reputation of crypto stayed for a long time. We still hear people that remember those days saying, well, Bitcoin is for terrorists, Bitcoin is for buying drugs on the internet, Bitcoin is bad, and blah, blah, blah. Yet it helped us get headlines, get attention on what was going on in our industry. In December 2013, I have to tell you about this date, of course. This is where Vitalik Buterin published the white paper of Ethereum. And a couple of months after, we had the crash, well, small crash of Bitcoin compared to crashes that we have experienced after this. But MT Gox closed, went for bankruptcy after a hack. The trial is still ongoing today. That's a recurring joke, a recurring topic you can chat with different all-time Bitcoiners. In July, from July to August, Ethereum raised money through an ICO, through people committing Bitcoin to get Ether and finance this crazy project that was Ethereum. The crazy project was building a computer on top of a blockchain, emulating a computer through a blockchain. July the 30th, the Ethereum mainnet went live. There is not something fancy in the Genesis block of Ethereum. It's actually a reference to the block on the testnet where it was created. Well, not too much fanciness indeed, but still marking a nice day. And another big date, I think, for our community and the global industry, in the global blockchain industry, was the hack of the DAO, since it was a live action of a governance action being taken place in the blockchain. But I'll tell you a little bit more about this. So on the pictures, you see Marc Carpales, the former CEO of MTGOX, apologizing to the Japanese authority, a little bit like how Carlos Ghosn will go in front of the authority after he was convicted by the authorities. And you'll see also the picture of different founding members or different core developers of Ethereum back in the early days. But let's put things in perspective Ethereum-wise, shall we? So if you are recruiting someone that can do or claim to be able to do Ethereum stuff or claim to be super proficient in Solidity, when I try to recruit those kind of people, I show them this chart without the explanation, and I ask them to tell me what it means. What is the history behind this chart? Well, I think you can see the whole history about Ethereum through this chart. This is the gas limit chart. The gas limit is how we measure how big are blocks on Ethereum. The bigger the gas limit, the more you can put in those blocks. And in here you see it starts on July 2015, of course. You have a change in early 2016 with the Homestead protocol fork, where the foundation said, hey, now the network has been running for 6 months. It looks fine, like we should make bigger blocks. You have the DAO attack, which I will tell you a little bit more about after this, and you have the denial of service attack, or the Shanghai attack right after this. And then you have the ICO craze. Many people went into this industry because they heard about ICOs, the fact that you can just buy a token out of the white paper, get a token that is almost liquid, maybe the token will be listed, and you can speculate a lot or commit long-term on a specific project. It's basically a really nice way to make quick money, but also to make quick financing of your project. And from many aspects, the ICO craze was one of the reasons we had the success with decentralized finance. Because right after the ICO craze, we went through hard months in terms of market status, which I think led many developers to think about how they can render those assets more liquid, how we can exchange tokens from one another now that we have them at hand. So there is a good thing to learn about this. Now that we have the NFT craze, we are likely to get a lot of application to be able to trade those NFTs in the coming days, not only the OpenSea and Rarible and so on. The block size had to grow also during the CryptoKitties craze, the first big NFT project that went out. And the last big push in terms of, the next pushes in terms of block size were improvement in how the Ethereum client behave. And the last big push was the EIP-1559, 1559, was it the typo here? But I'll tell you more about this in the next slides. So coming back to the DAO attack, who here remember the DAO? Well, not everybody, that's a pity. So back in 2016, the Ethereum community were having successes. The price were going up, people were getting interested, the narrative was good, and while some companies, some official companies like Consensus were heavily financing the space and creating startups, and disclaimer, I've worked at Consensus before, I love those guys. Some people in the community thought that we should build our own venture capital firm. The VC were not so much interested in Ethereum back in the days, so what about creating TheDRO, a VC fund, but built on a blockchain? Everything was running in smart contract. So I added a picture of not one of the developers of the DAO, but one of the developers of the Apollo project, Margaret Hamilton. The code of the DAO, from a Solidity perspective, was almost that big, like 600 lines also of code. And of course, it led to some problems, to some bugs. So back in those days, you could purchase a DAO token, so 100 DAO token against an Ether, if I remember correctly. And the project gathered about $150 million, or about 10% of the ETH supply back in those days, for financing this. So you can imagine the community being ready to commit 10% of the supply onto a VC project, creating a fund for the community. This experiment was short-lived, of course, because there was an exploit in the contract, an unexpected behavior of how the Ethereum virtual machine was behaving. And it allows an attacker to siphon Ether out of the contract. Of course, the siphoning was not super straightforward, as the different hack that we've seen in the DeFi space recently. You had to siphon the contract and put this siphon money into a new contract that you would only get access maybe 3 weeks or 4 weeks after. So it led to huge movement of Ether out of the contract into new contracts. When a white hat group of hackers understood the behavior of the hack, they tried to minimize the effect by doing the hack as well on their end and in order to protect the funds of other investors. And it led to a fork on the July 20th that corrected this bug by changing how the contract behaved and giving back the money to all the participants. This fork was not contentious, like record of how much of the hash power committed to change the blockchain was about 97%. And for many critics, it was the end of the Ethereum project because suddenly code was not low. Governance can be applied. Core devs and community members can ask for a change, and this change can be sent to miners that would decide if or not they should follow this chain. I'm not going to tell you more about the DAO. If you'd like to talk about those good times, please tell me about this after this talk. But the SEC, soon after the debacle, published a note saying, "Oh, this was definitely a security. I'm glad you didn't do that." Another event was the Shanghai attack. There's a typo here. It was not in July, but in September. So during DEFCON 2 in Shanghai, it appeared that one of the fundamental operations of the Ethereum virtual machine was not priced well. If you want to use a smart contract on Ethereum, it triggers operations like multiply, store, exponential, read the memory here, and so on. And one of the challenges of creating a computer on the blockchain was to properly price those operations for having a good pay-as-you-go system. And some of those opcodes were mispriced. It wasn't obvious initially in the code until you discovered that they are mispriced. And one attacker was spamming transactions that were calling those mispriced opcodes. Mispriced in what sense? Well, you pay some gas to run those opcodes. You convert those gas into Ether to reimburse the miners that will execute those transactions. But for the opcodes to be priced well, it has to represent exactly how much of a computing power you need to use to run those opcodes. Well, what happened is many nodes crashed. The network shrinked very quickly under this attack because the state of the client back in the days was not that optimized and not really able to handle those kind of rush of consumption of resources. And the reaction from the miners was to reduce the block size in order to cope for this attack. That's why you see this big downfall in terms of block size. So in order for the network to be able to cope better against the attack, the miners decided to reduce the block size. Meanwhile, many developers of the Ethereum Foundation and associated to the Ethereum Foundation were trying to find a fix in order for the network to still be able to live, not completely broke down, and also for the conference to start. Because it was 8:30 a.m. in Shanghai at these days, and people were like, "Oh, damn, the network is going down, what's going on? Should we do a conference or not?" Well, in the end, the network didn't stop, it slowed, and we managed to have the conference with a 15 minutes later. So here's a remark to what people like the CEO of Solana Lab were saying when they blockchain went down for 17 hours. No, it didn't go down for 17 hours as did the Ethereum, network. During the DOS attack of Shanghai, it just slowed. We handled less transactions, but it didn't stop. So having a blockchain that stops is a problem, of course. Having a transaction that rolled back is a problem. Having a blockchain that didn't give you finality is a problem. But all of those problems are very difficult problems to solve and very difficult problems to handle. Let's continue to put things in perspective. Another interesting chart is the average block time. So how long do you have to wait between blocks? In the early days of Ethereum, the block times were about 17 seconds. After the Homestead fork, we went down to 14, and now we are closer to 13 also. You may see during big spikes, here are attacks or big events in the early days. And the huge raise you have in July 2016, January 2019, January 20, and probably December 21, are built-in features of the protocol so that the protocol slows down if we are late on implementing proof of stake. Yep. It's a feature called the difficulty bomb that I expect many people to not be fully aware about, but it's something that was implemented very early on in the Ethereum protocol, because when you read the white paper, it's clearly stated we should build a good proof-of-stake system for our blockchain. Of course, proof of work is the best consensus mechanism that we know of at the time of writing the white paper. But we know that we think that proof of stake can be really good, and we are going to build a good proof of stake system. So behind this ambition was probably too much enthusiasm, not enough realization of how hard it would be to actually construct a good proof-of-stake system. And it took a long time to actually find the right proof-of-stake system based on the design rationale that the Ethereum Foundation and many contributors had. If you'd like to read more about this, I highly encourage you to check out History of Casper from Vlad Zamfir, or Exploring Ethereum 2.0 Design Goals from Ben Eddington. And so this is the merge pull request where they decided to say, yes, if we miss the deadline of July 2017, the blockchain should slow down to punish us for not being able to implement proof of stake. And this has been a recurring gag because you see every time this difficulty bomb kicks in, what happened is that we decide to implement an EIP that push back the difficulty bomb so we don't have to care too much, and we reset the timer until next time. I expect us to have to diffuse the difficulty bomb again in December, but that's going to be the last. And there is a major consensus among all the core devs of Ethereum 2 that December will be the last time we have to diffuse this bomb. But meanwhile, the EVM franchise grew a lot. You see here companies or blockchains that have built on top of the EVM franchise, EVM meaning the Ethereum virtual machine. So creating your own blockchain with your own consensus, with your own token, with your own type of security, of the own type of approach, but building that on top of an Ethereum basis. Ethereum basis being the Ethereum virtual machine, because you know that one of the power of the Ethereum protocol and the Ethereum community is creating standards, creating codes that can be reused, creating libraries that can be used to build better websites, better applications, and all talking to the Ethereum virtual machine at the end. And on the right-hand side of the slide, you see projects that have tried, sometimes successfully, sometimes less successfully, to build their own blockchain with their own EVM, with their own virtual machine, actually, and starting to build bridges on how your virtual machine should interpret what comes out of the Ethereum virtual machine, because the community in the industry is so big using this EVM. So let's say Polkadot with Moonbeam, you can run EVM code in Polkadot-based blockchain thanks to this. Last big thing that we've seen in the Ethereum history is the EIP-1559. What it is conceptual change in how the transaction works. If you have been doing lots of transactions lately, you may have realized on MetaMask that you don't really choose gas price anymore. Now you choose a max gas price, you choose a tip, you choose this and you choose that. Not wanting to go too deep into how this works, but what you should understand from 1555 is that now you are only tipping the miner. You choose how much you want to tip the miner. And the gas price that you should pay is expected to be at a certain level from one block to another. So we have good predictability on how much the gas price should be from one block to another. This is a huge change for a wallet provider, for wallet developers, because you can suggest a gas price with quite good certainty that the transaction will be included in the next block, that your user will not sit there waiting and look at Etherscan and trying to understand what's going on and expecting the transaction to go in, but you've been waiting for an hour and so on and so forth. Now, what's good for the protocol itself is that whenever we have a huge volatility in terms of gas price, like if suddenly there is a peak or surge of activity, of demand of being in a block space, like huge demand for transactions, then what happens is that some ETH are burned. The fees that we are supposed to send to the miners before are now burned, which is reducing the supply. In this graph, you see in green how much Ether are created to reward the person that participate to the proof of stake of Ethereum. In blue, you see how much Ether is created to reward the miners of Ethereum creating a block on the proof of work chain. And in red, you see how much Ether are burnt every day because of this volatility of gas. And of course, having new collections, new NFT collections dropping every now and then is really pushing the gas price to lots of volatility, so burning lots of ETH. And 2 days ago was the first full day of deflation, of reduction of the supply of ETH. I said we have Ethereum creation, Ether creation to reward the stakers, because Ethereum 2 is now. It has been now since the 1st December of 2020, a huge date for the Ethereum ecosystem, because it was the launch of what we call the beacon chain. I'll get onto that in the next slides. But it was also a huge date for me, because this is the date my daughter was born. So I had to run to the hospital thinking that, well, will my node kick in? Will everything will go? Well, let's go to the hospital and have this child delivered. Funny story about this Genesis block is that there is something in here called Mr. F was here as an Ethereum 2 validator. You can put a graffiti. You can announce the birth of your child. You can announce your marriage. You can announce that you love your mother. You can write anything you want in the graffiti. And this guy was drawn to be the guy to do the first. To be the first to make the Genesis block, to do the first block, and he put Mr. F was here because he apparently got an autograph from Vitalik Buterin at a conference saying, "I'll just say Mr. F, yeah, Mr. Fahrenheit." What is Ethereum 2, by the way? Difficult to put that in one slide, so taking this challenge. You can think of it as an airbrush. So imagine a wooden airbrush. The wooden part is the beacon chain. It's a coordination layer. And every range of hair here are blockchain of their own, or like we call them a shard. So instead of having one blockchain, you have many blockchains or shards that are all connected through a beacon chain that coordinate those shards and make sure that you have proper communication between those shards. Ideally, all of those shards will have an execution layer, so you'll be able to execute directly in the shard. It will come as time goes, but the next step will be to take the existing proof of work chain and make it as the first shard. What happened to proof of work after this merge? Well, it ends. We switch to a proof of stake model. Here's the program for the rollout. We've done the beacon chain. We've done the Genesis block. We are now going to the shard chains where you'll be able to have cross-shard communication. You'll be able to have the first shard, actually. You'll be able also to move the Ether that you have at stake from the beacon chain to the initial shard and eventually to the next shard. Ideally, it would be happening in December. It should be happening in December because we have the difficulty bond kicking in. And here you see a tweet from yesterday of one of the core dev of Ethereum 2 client Prism saying, okay, we have merged to the next stage of the Ethereum 2 beacon chain status. So the next step now is the merge. I'm expecting this to happen soon, and the phase 2 will be this so-called execution layer, where you get a much better virtual machine to execute your contract, and we have a better flexibility on the coordination between different shards. So you should be staking either through your exchange or through your own computer. Today, well, yesterday, the day before yesterday, we had about 51,000 unique depositors, 51,000 unique people that sent 32 Ether in order to be a staker. So total validators of 250,000 creators of blocks. When you are validating, you are getting a return in terms of ETH. So you can expect to have a 5.4% on all the ETH that you have at stake. And if you look at all the Ether that are securing the network, it's about 33.2 billion. But that's the price of the days before yesterday, so it's probably a little bit better now. And you should try to run your own node. I know in this room we have many providers of staking services or many exchanges that propose that you can stake with them, but it's not that difficult to run your own node. Actually, it's meant for the layman or the general computers to be able to run these beacon chain nodes. You can go down to Raspberry Pi 4. The design rationale is that any Ether holders with sufficient understanding of how to run a program on a computer should be able to run this on their laptop. Next step, the merge. When we will be at the merge, there won't be any proof of work anymore. Like the block of the merge, there won't be proof of stake anymore. I repeat, there won't be proof of stake anymore. The chain, proof of work chain that we know today, will be secured by proof of stake, by inputs from the beacon chain. So we will be able to go out and say, yay, Ethereum is green. And stake ETH will be withdrawable to the Ethereum 1 chain soon after. And the current target is Q1, and the worst scenario will be Q2, actually. So here are some predictions to close this talk. I think the merge will happen on the 14th of February 2022, because we all love Ethereum. And what should happen after this merge is that the staking rewards should become a base APY for every DeFi product that use ETH. Because why would you put ETH as liquidity providers on an automatic market maker like Uniswap or others if you can put them at stake? This will probably be a huge opportunity for liquid staking providers like Rocket Pool, Stakewise, Lido, and others. And ETH is very likely to become massively deflationary. As you see on the previous slides here, if we consider that we are not going to, oh my God, I should have put these slides after this one. So no. If you look at these slides and we consider that there won't be a huge spike in terms of number of validators. So the more validators means that there are more rewards given to the validators, but in a decreasing manner. So if the number of validators double, we don't double the rewards. We do quite less than that, actually. So taking for hypothesis that we are going to have quite the same number of validators, we are going also to have quite the same level of activity. If we look at the current burn rate and the current emission rate of Ethereum per week, that means that we have about -2% of inflation every year. So that's just on the baseline scenario. So I think this conference was opened as I was open with these headlines. Buy Bitcoin, not because it will go to 100,000, but because everybody has to do their parts. Well, I will end this talk by buy Ether, not because it will go to 100,000, but because it will buy itself. Thank you.